Okay, guys, in this episode, we're going to talk about candlestick patterns and what they mean. These are used for signals or, guides, trends, signs that you can watch for to check out, if something is going to reverse or whatnot. So let's check out the components of a candle. So, um, each of these candles, as you notice, this is called a body here. Now, the real body represents the price ranges between the open, which is basically just the top of the candle body, and the close, which is the bottom of the candle body. Now, when the real body is filled in this case red, it means the close was lower than the open. Now, if the real body is empty, it means the close was higher than the open. So you'll also notice that there are these little wick or tick looking things at the tops and the bottoms of the candle bodies. Now these are called wicks. Some people may call them shadows. I call them wicks. So these wicks show the high and the low prices of that day's trading. If the upper wick of the candle, and let's say in this case it's a down candle because it's bare. So if the wick is short over the daily candle, it indicates that the open, which is the top of this candle, was near the high of the day. So what this tip of the wick is representing is that this particular time frame, this is a 12-hour chart again, mind you, that at the top of this 12-hour candle, it reached a high of $13,203, for example, but it opened. The daily open ranged at about $13,000 even. Now, vice versa is the same for the wicks on the bottom. The candle wicks, they can be long, they can be short, as well as the candle bodies themselves. They can be long or short. So here we have a long wick, and here we have a short wick on top. Here's a short wick on the bottom, and here's a nice big long wick at the top. Excuse me. So there's patterns in these candles also that are separated into bullish and bearish. Well, excuse me. Let me back up one more part on these wicks here. So basically, in a given time frame or in a given candle rather, if you see a long wick like this, what this represents is that this was the low of that candle on this particular time frame, and what caused it to go into a wick or create this wick was buyers on lower time frames, so to speak, rushed in and bought this much of the candle up to prevent it from being a full red body candle all the way down. Like this one here. You see this one doesn't really have a top wick. It's really small, and this one has a really small bottom wick too. So this means that there was a lot of selling pressure, and the bulls failed to come in and try to rally that price back up. So this resulted in a much deeper candle close. This is a deeper full body close. But here on this wick, some buying pressure did come in, and you see this is where the end of the close of this candle was here at 12:01. But in this particular 12-hour time frame, it reached a low of 11.5. So that means buyers came in and pumped this thing up about $600 to force that into a wick. And that's basically what these wicks represent. That's what wicks are. So the top of the wick represents the high of that candle on that particular time frame, and the bottom of a wick represents the low part. The bottom of the candle body, where it's full, represents the close here, and the top of the candle body, where it also ends and goes into the wick, the top of the candle body is called the open. And then obviously this is a bearish candle, this is a bullish candle. Okay, so like I was saying, there are some basic candlestick patterns. and they are separated into bullish and bearish patterns. So I kind of took the liberty to kind of highlight some that I just kind of glanced and noticed, and we'll go through some of these and describe and talk about a little bit about what they are. So bullish patterns, of course, are patterns that indicate that the price is likely to rise, while bearish patterns indicate that the price is likely to fall. No pattern, please keep this in mind, no pattern is going to work all of the time as candlestick patterns. They just represent the tendency or a possibility for price movement, but it's not a guarantee. So let's look at some of these. I was already up here kind of hovering around this bullish engulfing pattern here. So what this bullish engulfing pattern is, it develops in an uptrend, okay? And when sellers outnumber the buys, this action is reflected by a long body candle, or real body as it's called, engulfing. So you can see this red candle is much larger and engulfs this green candle here. Okay, so this pattern indicates that sellers are back in control and the price could start to continue in a decline. So to really kind of confirm this pattern, this is a pretty good signal that this particular uptrend just ended abruptly, because that is a lot of selling pressure. So when you see something that is a bearish engulfing candle like this, now it may not be as deep, it may only come down here, but the bearish candle is just bigger than the green candle. And a lot of the times that's going to signal that there will be a downtrend. And you can see the downtrend happening shortly after that. Okay, now vice versa to that, where is it? Right here, is a bullish engulfing candle. So it's just quite literally the opposite of the bearish candle. Now again, this is a green, you see the green candle here that engulfs, let me zoom in just a little bit more here, that engulfs this red candle. Now, as I noted when talking about this bearish one here, it doesn't have to be a monster candle. It can just be slightly bigger than the previous candle. So in this case, this green candle is engulfing this red one because it's bigger. You see just a little bit bigger there. So this basically just means that the buyers are outpacing the sellers, and it's just reflected in the chart by a long green body engulfing a smaller red one. So with bulls having established a little bit of control, the tendency is that the price could lead higher. Okay, let's point out another one, some important ones. Oh, a shooting star. Shooting stars or a doji, an evening star, they're kind of similar. It's just you can have a small candle body with a long wick up at the top. So what that is then an uptrend, that there was a nasty rejection. The sellers took over and just really pushed that candlestick down, and typically that results in a downtrend. So it's a topping pattern. It's identified by the last candle in the pattern opening below right here the previous day's small red body. So you can see where this candle right there on this one is what I'm pointing at, and you see this shooting star right beside it is just slightly below. I'm sure we can find a better example, but this one kind of just popped out at me there. So what this means is that the pattern shows a stalling of the buyers, and then the selling taking control, and it's just an indication that more selling could develop. Okay, let's go find another one. Doji candles. These are just represented by small candles that don't really give a direction in either way. Most of the times dojis will have wicks on both sides of them at varying lengths. Dojis more or less represent indecision, so it really means that it can go either way, and I think we're actually looking at a lot of dojis on the current price candles here. You can see that there's no real movement in either direction. These candles are kind of small, and it's not really giving a direction or a signal for direction in either way. So somebody has to step in here, either the bulls or the bears, and they have to either push this candle nice big and green, or they have to dump it into a nice big red candle. So that's what a doji is. A bullish harami. Let me zoom in a little bit here. So when a downtrend is in play, it's a small real body or candle body occurs inside a large red one. So you can see that this green one, it's got its open and close inside of the previous candle right here. Okay, so this tells traders that the trend is pausing. If it's followed by another up candle, then it signals that more upside could be coming. So here we have another doji and another green candle, still in an uptrend. Now we got a little drop right here with this wick, but again, remember, you can see that this wick resulted in a large wick. So that means the buyers came rushing back in to push this back up. And then you can see what this signal identified and represented, and the trend after it. So that's a bullish harami. I think we talked about bearish engulfing. So a bearish harami is really just the opposite of the bullish one. It's just a smaller real body or smaller candle body inside the previous day's body. This not so much of a pattern to act on. The haramis are, but it's one that you to watch and take note of. This pattern in particular, shows indecision on the part of the buyers. Now, if the price continued higher afterward, well, it may still be well with the uptrend, but a down candle following this pattern would indicate further slides. So that's what we see here. So we have a smaller bearish candle inside a bullish candle, because this candle is not up here. Okay, so this is what a harami is. It's basically inside of this candle. Now it could also be like it is here, about even at the top, which is perfectly fine, but it's not something like this or something, so to speak. Is pretty well inside of the major candle, and then the next candle after it did follow in some downside trend. Now, it does not mean, though, that just because there's a bullish candle pattern, that the trend is just going to go down to zero or something. It doesn't quite work that way. Let me see if there's others. I think I kind of captured all of the ones. A hammer. A hammer just results in a downtrend that is quickly bought up into a wick, and you can see, you can kind of just, these are easy to spot because a lot of people call them hammers because they look like a hammer. If you think of Thor's hammer, he's got the handle and then the hammer body itself, so that's why they're called hammers. So what this means is that there's a pretty good downtrend, and usually on a large drop candle, that immediately gets bought up, and buyers come rushing in, and it forces this wick, and it looks like it had a pretty good close, and it opened as it ended up turning green, and then it usually follows in an uptrend. Now, vice versa, if this were flipped around and you had a long wick with this little hammer body part down at the bottom, that's called an inverted hammer. And it acts kind of similar to what a shooting star is. If you see an inverted hammer at the top of a trend, let me see if I can find one real quick. There's too much chop right there. Okay, well, I guess here's one. It's a little one. So this is an inverted hammer right here. The red candle, you can see it's got a nice flat body at the bottom, and it's got this little wick poking up right here. So this is an inverted hammer, and you can see the result of the downtrend afterwards. So these are just patterns. These are just kind of like signals for traders, and a lot of these play out the way that they are intended to, because a lot of traders or bots algorithms kind of also take note of these candle patterns, and they tend to follow them as well. So if I'm a trader and I bought down here off of these doji candles, it's like, okay, well, selling, this is in a downtrend here, and these doji candles are kind of signaling that we're moving a little bit sideways, so selling is kind of dried up, and I'm getting some dojis showing some indecision. So I'm going to take a chance and I'm going to buy this, and I'm going to ride it up. Now, if I were to come up here and if I were to see this shooting star, now this would be a good signal for me that I'm going to take profit and step out also, as this was a nasty rejection right here, and this was a pretty long wick. And this is really signaling that buying pressure, the buyers are stepping out. Now, you did see just a little bit smaller uptrend after that, but it's not worth risk staying in that trade when there's a nasty rejection like that. Same with this in bullish engulfing candle here. If I bought down here off of this bullish engulfing candle and I rode this all the way up, even on this nasty drop here, if I had sold out on that one, and then maybe picked back up here on another bullish engulfing candle, and then I saw this big drop candle, well, I would have certainly have stepped out and locked in my profits then, as this would have been a good signal that this candle is significantly larger in selling than this buying pressure candle. So I would have identified that as bearish engulfing. I would have taken my profits and stepped out and then rebought down here when I saw that the selling pressure has eased up, and then maybe sold again off this shooting star. So that's how you can kind of read what these candlestick patterns are. Now, there is a cheat sheet, and I will certainly post this with the video. So there are some bullish candlestick patterns to look for, and these are what they look like. Okay, these are neutral patterns, and again, when I mentioned the doji just a minute ago, it means that there's no real buying or selling in either direction, so it's indecision. So indecision is a neutral pattern. And then the bearish candlestick patterns. Now again, we talked about the shooting star. The gravestone doji kind of looks like the shooting star. Now the shooting star, again, also can be called an inverted hammer, as this kind of does look like an inverted hammer here. Here's the bullish engulfing, the bullish harami, bearish engulfing, bearish harami, and there's a couple different other patterns. And then there's also this cheat sheet as well. See, here's another shooting star. Here's a bearish harami. There's a lot of different patterns out there, and it's hard to kind of recognize all of them. But I think this chart here is the big ones that you should follow. These are really good indicating candlestick patterns, especially a shooting star, gravestone, doji, hanging man. Here's that hammer I talked about. Here's an inverted hammer. This one is just at the bottom of a downtrend. So a lot of these patterns signal to traders of price direction. So it's a really good note to have and really good to follow. So practice with these. Practice just kind of going through the chart and looking at candles and seeing what you can identify, and seeing the relationship of price action after that. So if we come over here to a clean one, or a clean area rather. Okay, well, here's a bullish engulfing candle. That's a really big bullish engulfing candle. You see the price trend after that. This is almost some tweezer top candles here, and then it resulted in a downtrend. Here's a small shooting star or an inverted hammer here that resulted in a downtrend, and so forth. So practice these. These are really great and handy tools when you're trading, whether if you're a scalper or a swing trader, to kind of help give signals of trend reversals. Okay.